Well, thanks. I got Spencer Lane from Spencer Lane Insurance, Shelter Insurance in Joplin, Missouri, here with me today. And he's taking the time out to answer some questions that I have about business insurance. So I've got a few questions about my insurance protection, and we're going to talk about some of that stuff today. So, Spencer, if you want to go ahead and introduce yourself.
Hey, yeah, well, I'm Spencer Lane with Shelter Insurance, licensed in Missouri, Arkansas, Oklahoma, and Kansas. Property, casualty, so home, auto, life, and some commercial insurance. I'm glad to be here. Thanks for inviting me, Eric.
Yeah, absolutely. So it's something we need to put out there first. Neither of us are lawyers, accountants, or CFPs. So anything in this discussion isn't to be taken as legal accounting or financial advice. It's going to be based on our own personal experiences. So hopefully you'll be able to take some of the things that we learn, that we talk about here, because an important part is just being able to speak the language. So if you understand some of the vocabulary that's happening in the insurance world, being able to take that and educate yourself, and if necessary, retain your own legal, accounting, or financial advice to make the best decisions that you can. But hopefully after this discussion, all of you and me will be better informed about our insurance needs as real estate investors. So we're going to talk a little bit about vehicles. Spencer and I have talked before about insuring a company vehicle. And so you can check out, I'll put the link to that video down below if you want to know a little bit more about getting a vehicle for your business. We're going to talk a little bit about vehicle and employee insurance. We're going to talk about insurance needs for workers that you have on the job, whether it be a construction or remodel or whatever at your investment property. There's some insurance things you should be looking out for with workers that are on the job site that I have some questions about, and Spencer can talk to. And then lastly, insurance for your real estate investments. And this will be the meat and bones of our discussion. We're going to talk about the essential elements that you need as a real estate investor. I have some questions about how those break down. I get evidence of insurance quarterly, and I just want to make sure that I understand what those things are on my EOI. Also, we'll talk about some things like actual cash value versus replacement cost, what you need to look out for with those things, and also loss of income on your insurance when you're getting rental property insurance. So a lot of stuff today. Thanks so much, Spencer. And let's get into it with vehicles. So Spencer underwrites the vehicle insurance for my company vehicle in Joplin, Missouri, as well as some other things, and has been good about setting that up. One thing that I've been wondering is looking at hiring a handyman or hiring some other help in Joplin. Something you run across a lot are people who either, if they don't have a driver's license, that's totally out of the question, but sometimes you run into situations where people have maybe had DUIs on the records. They have some kind of non-standard driving record. Maybe the DUI is not on their record, but they've been arrested for one before, and they've gotten it downgraded to some lesser charge. What are some of the insurance considerations when you're hiring someone like this? Now, once again, this isn't HR advice or legal advice in the hiring decision or anything like that. Specifically, we're just talking about the considerations if you were to hire someone that has a less than stellar driving record, putting them on insurance. What are some of the things that could become headaches in the future?
Absolutely, yeah. I mean, that's definitely something you've got to take into consideration when thinking about hiring an employee and giving them the rights to drive your vehicle and letting them represent your company, really. I mean, at the end of the day, it is your company, so it's your lifeline and your family's lifeline, so you really have to take that into consideration. I know specifically for us, we kind of look at it as depending on what they've done, if they've had a couple tickets or something, and depending on what the magnitude of those tickets are in the point system against their licenses, we can kind of work with that sometimes. It's definitely going to make those rates go up a little bit depending on what they do have on their record, but we can typically work with that. When you get into DUIs and SR22s having to file with the state, everything like that, that's where it gets really hairy, and you're going to have to get some specialty insurance for that. Most regular insurance companies, they may want to look at it. Most time you're going to have to go high risk, or even they may not want to write it at all, just because commercial liability is so much different than personal liability, and they are representing your company.
Awesome, thank you. So as an employer, we're not lawyers, but with a SR22, this wouldn't be considered a legal definition, but what is kind of a layman's definition of a SR22, or where would you educate yourself more on that, and how would you know if someone has that as an employer?
Yeah, so an SR 22 is basically just a requirement by the state to file insurance coverage if you do have a DUI of some sort or something like that on your record. So it's just going to say, hey, this person did get their license revoked or something of that magnitude. And we do require them to have proof of insurance for that filed with the state. So typically it'll pop up. The MVR, motor vehicle records, will show that as long as they're going to have to tell you it, because they're going to have it filed to be able to drive a car. So it is obligated for them to keep their license.
Okay, awesome. Thank you. And then additional things when you're insuring a company vehicle. From my understanding, the process seemed relatively similar when I got insurance with the company vehicle as when I got my personal vehicle, with the only difference being that the employees that were authorized to drive the vehicle, we got their information in to shelter, so that way they could legally drive the vehicle. Beyond putting the employees that have access to the vehicle on insurance, what other key differences is there in insuring a company vehicle versus a personally owned vehicle?
Well, it really depends on how the title of the vehicle is named on there. If it's made to a company, an LLC, obviously it is probably a commercial use vehicle. I mean, there's some exceptions to that. Most of the time, that's what you see, as well as a cargo van. If you see a van with no windows on the side and it doesn't have any seats in the back, odds are that's going to be a commercial vehicle. Or a half-ton trigger pickup, that's going to be a commercial vehicle typically. Whereas a minivan's just your personal use. You can be using that. You also have to look at commercial policies if you're going to be driving anybody around as a chauffeur, showing them your properties or anything like that. Really, if it's just used for business use, you're going to have to put those mileage on there. So there's a difference. You can add business use to your personal liability or to your personal auto policy. So for me, my instance, I have my car that I drive when I'm going to inspect property, so I do use it for business. But it's also me and my wife's car on the weekends and the evenings and stuff. So I have business and personal use on there. So you can do that as well, just depending on what the actual uses are for it.
Awesome, thanks. And then last question is, with employees, are there discounts or is it advantageous for them to have a commercial endorsement on their driver's license, or are there other discounts or bundling practices that businesses should think about when they are getting business use insurance on a vehicle?
Bundling is always a good thing if you can have multiple lines of products with the company. Your general liability, your commercial fire, your homeowners, even your personal stuff. It's always good to keep those because discounts obviously layer up over and over. But as far as the certain licensing goes, CDL stuff like that, it's just really in accordance with those state laws. So if you have to have a CDL to operate a tractor, truck, and trailer, you're going to have one with insurance too. We are going to require those.
Okay, great, thanks. So now we talked about vehicles a little bit. Let's talk about workers and people on the job site. When we're buying rentals, a lot of times there's deferred maintenance, there's problems that need to be remedied. And so getting people on the job site is essential, whether it be roofers, plumbers, contractors. I know we'll talk a little bit more about liability and personal injury that you carry on the property itself. But as far as those workers, what is responsible as a homeowner or an investor to be looking for in those people that you're bringing onto your property?
Absolutely, yeah. There's different kinds to this too. Depends on the kind of help you're hiring and how you're hiring them. So if you're going to have an in-house handyman who's going to be doing everyday fixes, maintaining the property, changing light bulbs, smoke detectors, locks, different stuff like that, you'll definitely want to get them added on as a name insured on your general liability policy, as well as probably looking into workers' comp for them if they are an employee. But if you're doing subcontracting where you're going to hire that roofer because you had some roof damage, or just that subcontractor to come out and do everyday fixes here and there, different stuff that you just don't want to have to handle, you do want to make sure that they provide you with a certificate of insurance. You're going to want to make sure they're licensed and bonded through the city, and they do have that business insurance, that liability insurance, so that it does not come back on you if they were to get hurt. There is instances where mean, people without insurance can do it a lot cheaper because they're not paying their premiums. But then you get a roofer up there with some people that they hired, and one of them falls off the roof, and instead of it being covered on their insurance, it's going to go back on you. So again, that would go back on your company as well as at the end of the day, you and your family. So definitely going to want to make sure they have their own insurance there.
Great. And what's the best way to check that insurance? Is there like a state website, or is it incumbent on you as the homeowner to ask for some kind of documentation from the contractor? What's the best
Yeah.
way to verify their insurance?
Yeah, so just ask them whenever you're hiring them. I do require a certificate of insurance, and they will provide that for you through their insurance company. So it will have you, it will be issued to you, or your company, your LLC, whatever it is, your name will be on there. It'll show you their coverages, and the named business will show you all their coverages, so their liability coverages, their property damage coverages, limits, everything like that. It will show you the time frame of their policy too. So either the 6-month period or the year period of their policy, it'll show when it's in effect for.
Great, thanks. Anything else on workers and insurance with them before we move on to the big questions, the actually insuring investment properties?
Sure, yeah. And another thing to do on those certificates of insurance is if you hire someone and they're a regular employee, but they are subcontracted, so they don't actually directly work for you, you can also require them to add you as an additional interest to those insurance policies. That way you are named on the policy and tied to it, so that if they ever canceled that policy, you would get a letter in the mail stating they had canceled that coverage, so you would know they weren't covered anymore and you would not be at risk yourself.
Oh, great. Thank you. That's very helpful. All right. So the big question, what insurance do we need for as real estate investors? So when I look at my evidence of insurance, I see several different elements. I see the actual property protection, I see the liability, I see personal injury, I see loss of income, and then the actual insurance protection can be either actual cash value or replacement cost. So first of all, let's kind of like work through these definitions of the protection, whether it be ACV or replacement cost. And then let's talk about liability and personal injury, specifically, like kind of what's the distinction between those two. So like actual cash value versus replacement cost would be one thing to talk about. The next thing would be, what's kind of the difference between liability and personal injury when we see those dollar amounts on the EOI. And then lastly, the importance of loss of income as a real estate investor.
Sure. So depending on the state, definitions can vary a little bit, but typically, in layman's terms, I guess you could say actual cash value is going to be the value of a property less depreciation and then your deductibles. So if you come in and they say, oh, well, this house is worth $120,000, but it's X amount of years old, so we're going to have to take off 20%. That's what they would do. They would depreciate it, and they would take into consideration the condition of the property, the roof condition of the property, and those can be adjusted as well. So then on your flip side, it's replacement cost. And replacement cost is they have those limits of liability to where they do a replacement cost coverage indicator, and it shows you how much it would actually be to rebuild that home. And so they'll go up and get you something likewise or of equal value or likeness, and either rebuild it for you or fix what has been damaged up to those liability limits. So if they can restore your house, if there's a storm that comes through and they can restore your house or your rental property for $100,000, but your limit's $250,000, then they'll go up to that $100,000. But if, for whatever reason they've done that replacement cost coverage and they just get into some crazy stuff and it ends up being $300,000 and your limit was $250,000, they would just go up to that $250,000. So whatever that coverage limit is, and that's important for a homeowner to sit down or a investor to sit down with their insurance provider and really get into the guts of the policy and get into the guts of their home and make sure that they do have the coverage and they know what they have. And that's whether it's with shelter or whoever you use. I really encourage that to be a regular thing. Sit down with your insurance provider once a year at minimum and just go through everything. Have there been any additions? Has there been any did I sell something? Did I put a little bit of work into something, or did I get a new roof somewhere? It's always important to do that, because we can also do the replacement cost versus actual cash value on roofs themselves, to where, you know, maybe the house is in great condition and it's pretty nice house, besides the roof is 15-20 years old. So we may do the whole house on replacement cost minus the roof, where the roof is on actual cash value. So always important to update that information with your insurance provider, and really sit down with them and let them talk specifics on that state regulations and everything like that, and the specifics of their policies for their company.
I think this is important to dig into a little bit more too, because I think sometimes investors, especially, I know myself. Once you start paying premiums on a number of houses, it's enticing to see that super low premium vice the higher premium. But then when you get into specifics like depreciating out roofs, and you know, if there's a hailstorm in a small town like Joplin, where I have several rental properties, and you are on an actual cash value system and you sustain damage to a number of roofs in one storm, you know, by having an ACV policy, vice replacement cost policy, you as an investor need to be prepared for that financial burden, you know, if those roofs have already depreciated out significantly. So you want to talk a little bit more about some of those considerations with when you're getting that discounted premium by some of the, you know, the risks that you want to think about. You know, if you would rather pay that higher premium to maintain lower cash on hand, you know, for maintenance, vice paying the lower premium but maintaining some cash on hand for those sustained repairs that, you know, are inevitable at some point.
Sure. Yeah. So, I mean, yeah, you're going to be paying for it, your premiums either way, and you're going to want coverage. It's really just kind of up to you what you're comfortable with and what you think, you know, it's worth. Ultimately, insurance isn't to make you better off than how you already are. It's to make you equal or whole. So, cash value, actual cash value, really isn't a terrible thing on houses and on roofs if you're comfortable with that. But at the same time, you know, it's not cheap to get a new roof. So, you know, if you've got 10, 12 properties and you have a storm that comes through and takes off 5-6 roofs, and you've got looking at $20,000 of roofs, I mean, you got maybe less your $1,000 deductible. So where you could be paying, you know, $5,000-$6,000 in deductibles, now you're looking at, you know, $30,000-$40,000 in deductibles and actual cash value depreciation you're paying out of pocket on that. So definitely something to think about your risk. I mean, those lower premiums are nice, but can you afford to pay for those claims out of pocket if something happens? Are you going to have that money sitting there, or are you going to need the insurance to help you with that?
Gotcha. Thank you. Appreciate it. All right. So as investors scale up, that's when insurance really becomes a big deal. Because when I had 5 houses or fewer, it was an afterthought. It was something I just I get a rental policy premium. I make sure that I had my loss of insurance or my loss of rent insurance, and no big deal. But then as you scale past 5 properties, especially past 5 properties in one location, there's a lot more considerations. And then as we get into multifamily and, you know, syndicated deals where you have multiple people contributing, you know, now you're starting to have big insurance needs on big assets. And so I really look forward to hearing what you have to say about some of the offerings that are out there for investors in real estate spaces.
Yeah. Well, actually, I got a little bit of something prepared for this, so I'll go ahead and share my screen with you here, so we can take a look at that. Okay. All right. Can you see that?
I can.
Good. All right. Perfect. So, let me see. It really is all up to what you're trying to insure. I mean, investment properties are investment properties as long as, you know, commercial versus residential. So residential properties are unique in a couple different ways. You can do multifamily homes, or you can do single family dwellings, or even mobile homes, modular homes. So we have a couple different policies here. We have our apartment owners policy, which covers those new dwellings, single family dwellings are really good condition. It also covers the multi-unit homes. So you can do your duplexes, your triplexes, your fourplexes. So we've got a vast majority of them there. You can do actual cash value on these or replacement cost on these. They are pretty good. You got 5% for coverage on your dwelling. You got your full dwelling for replacement cost, and 5% of that is actually yard fixtures, signs, indoor swim or in-ground swimming pools, different stuff like that for coverage. You also have up to 10% on detached structures. So if there's a shed in the backyard or a fence, that's covered 10% of that dwelling amount, and that's where you would go sit down with your agent and see, well, what's it going to cost to replace this for replacement cost versus what's the market value of this for actual cash value. So that's kind of where you get those percentages at. Let me see, I can take you here. So that kind of just breaks down a little bit more. You do have your property coverage, which you can do a couple different forms of it there. You have your standard form, which is just fire, lightning, windstorms, hail, explosion, riots, loss caused by some vehicles, not your own vehicles, but if Joe from down the street's having a crazy night and accidentally runs in through your front living room wall, we could cover something like that. Damage to aircraft, smoke damage, or vandalism would be covered on that. Then we have special form. So special form is, you can kind of look at it as liability versus full coverage on cars. There is no such thing as full coverage, but special form is going to be that top of the line. It's going to cover most of those things. So you're going to have all the things I had stated before, plus collapse of a building, breaking of glass, theft, falling objects, weight of ice or snow, water heater system, chemical acid spills, accidental damage to a building, spilled paint damage, stuff like that, a water backup from ice. So those kind of things. And then depending on how many properties you have, this is really, really where you're going to get into that loss of income is super important because, everyone needs that income. And you think people have their day jobs, but if someone's job is rental properties or investment properties, that is their income. So they're going to need that if the house burns down and they're trying to get it built back, or if there's a damage or a loss there of some sort and they couldn't have someone rent that, that's your income. So you've got to plan for that. And so we can do loss of income. Each of our dwelling and rental properties come with 10% of that dwelling value, up to 10% of that additional income expense. So you can definitely plan for that. Make sure you have plenty of income expense coverage there. Another huge aspect you have to think about is liability coverage. And there are two different kinds of liability coverage when it comes to investment rental properties. One is actual physical liability, trip, fall, different stuff like that. And if someone is on your property, you are covered, you are liable for that. So someone comes over to see your tenant and trips and falls in the parking lot or the driveway or whatever it is, that's on you. So you've got to make sure you have plenty of coverage there so they're not coming after you and trying to take all those assets you've worked hard for. But on the other end of that too, you want to make sure and adequately screen your tenants and make sure they have their own coverage. You can require renter's insurance for them that covers their liability portion of it. So that if someone comes over to their apartment and gets hurt, or their house and gets hurt inside of their home, that would go on their renter's insurance liability policy instead of coming back at you. So that kind of helps there. You can also be named as an additional insured on their, or additional interest on their renter's policy, so that you would know if they ever canceled that renter's policy, and you could require that in your contract if that's something you want to work out with your attorney in there. But that's very important for the physical aspect of it. Make sure you have plenty of coverage. It's important to think about. If you have a swimming pool in one of these properties or something, make sure it's marked properly. Make sure you've covered your bases. Make sure there's a fence around it, because if someone trips and falls or drowns or breaks their neck or something in that pool, is $1 million in liability coverage even enough? How do you put a price on that, on someone's life or someone's mobility or livelihood? So think about those limits and sit down with your professional advisor and have them talk about those options for it there. Another aspect of that is personal injury, and personal injury is more of that liability for professionals. So you're thinking, what happens if the landlord wrongfully evicts somebody or goes in goes into an apartment when they weren't supposed to, or a house when they weren't supposed to, and they get sued that way. Well, as long as they weren't deliberately doing that and trying to just break the law, most of the time, if it was just a negligence, that will be covered on that personal injury. So make sure that not everyone's perfect, and this could be you, this could be your employee, but make sure you are covered there with that personal injury as well, so that mistakes on your behalf or on your company's behalf don't come back and really bite you.
Awesome. Thank you very much.
Mm-hmm.
I appreciate that. That's super informative. I think the last question I really have, let's get down to stereotypes. And I think a lot of times, there's different value provided by different professionals. And so you see this with realtors, you see this with insurance agents. Obviously, with the value you've delivered, the professionalism you've delivered on here, you're clearly very well informed as an insurance agent. But I think we have to address the elephant in the room. There's a stereotype that a lot of insurance agents maybe are kind of lazy and just sitting back, collecting premiums, not really well informed about their trade. How as a consumer should someone pick their insurance agent? A lot of those stereotypes exist for a reason. What's a good interview process as someone's looking for an insurance professional like yourself to handle their most protection on their most valuable assets? What would you suggest people do as they're looking to interview and seek out insurance professionals?
Just be sure that you find the right fit for you. Find someone you trust. Definitely do your due diligence, do your research on them, do your research on the company, see how their claims are handled, see where they rank on complaints, and how many complaints have been turned into the insurance department against these companies. Also read the personal agents reviews, get on their Facebook page, get on their Google My Business page if they're on that. Talk to people in your community, see who they refer you to, and just sit down and meet them. Make sure that your personalities intertwine and you guys can work together and you can trust them. But make sure that trust is your number one key going in there. Don't base it off price. And I know that can sound like a sales guy just saying, "Oh, price doesn't matter, write me a check," but that's not what it's about. If I think that you're spending too much money, I'll tell you that. But if I think that it's the best coverage for you, I'm also going to tell you that. And I'll tell you, if you don't think that maybe we're too high on it, go check around, go talk to somebody, whatever you need to do. But at the end of the day, know that I recommended what was the best thing for you, and I'm going to have your best interest in mind. So if something happens and your livelihood's at stake or your business is on the line, you're going to know who to call, and you're going to know that you were all taken care of. Because at the end of the day, is a couple $100 in premium that you save by doing it online or doing it with a fly-by-night insurance company, what happens when they aren't going to pay those claims? Then you're missing out on tens of thousands of dollars or more potentially, and because you didn't have the right coverage. And then now you've got to get an attorney and try to sue and deal with all the bad stories of the insurance companies because you didn't know what coverage was there and you didn't have an insurance agent who properly informed you on that.
Awesome. Thanks so much. Can you just, in closing, could you tell everyone again where you're licensed and what the best way to get a hold of you is if they're looking for insurance in one of the states you're licensed? And we'll put the link to that either up above or down below somewhere where they can contact you.
Yeah, absolutely. Well, again, I'm Spencer Lane. I'm with Shelter Insurance Companies. I'm licensed in Missouri, Arkansas, Oklahoma, and Kansas. We are located at 1425 East 32nd Street here in Joplin, Suite B. And you can reach us by phone, 417-781-5286, or by email. It's slane, SLAYNE, @shelterinsurance.com.
Awesome. Thanks so much.
All right. Thank you, Eric. It was great talking to you.
You too.